So this is the weekly chart of the QQQ, which is the ETF that follows the Nasdaq 100. And for the first time in 6 weeks, we've had a down week. So beginning of the year, we were up. Second week of the year, we were up. Third week of the year, we were up. Fourth week of the year, we were up. Fifth week of the year, we were up. And then this week was red. So recently we had Microsoft report earnings, they top estimates. We had Facebook report earnings, they top estimates. But on the other hand, you had Apple, which really had lousy earnings. Intel had lousy earnings. And then we had the Google's AI Bard snafu, which dropped price, and in the process, it lost. Google lost $60 billion in valuation. But I think the biggest reason why we were down this week is renewed fears that the Fed's U.S. Fed Powell may next rate hike might be a 50 basis versus or 0.5% versus a 0.25% increase in rates, and or a delayed pivot, Fed pivot. We also noticed that this steep climb, although it's kind of in alignment with the S&P 500, compared to the S&P 500, the Nasdaq or the QQQ versus the SPY is oversold. So let me just mark some things off. I'll do it in so it's quicker. So yes, short-term trend is up, but the longer-term trend is still down, right? And let me just show you. Lower high, low low, lower high, low low, okay. First higher high that we've had since November of 2021. Higher low, and higher high. So technically the trend is up. However, I will not be convinced that the uptrend is going to resume until we take out this $330 level. And reason being, this was the move that took out this pivot low here. So this leg down is controlling the bigger move. Now potentially we have a double bottom, which is bullish. So when you put the entire picture together, you have this secular downtrend, but you have a short-term let me put that in yellow. Let's put that in let's put that in green. Let's keep it yellow. I'll just make it darker. So secular downtrend, short-term uptrend. You have double bottom. You have or you don't have price taking out the pivot high, which is the down leg that's in control because it took out this pivot low. And let me just mark. And then from a fundamental standpoint, so this is the technicals. From a fundamental standpoint, you still have many companies, but significantly in the tech field, that are laying people off, right? All the FANGs have announced layoffs. You have consumers running out of money, consumers increasing their debt load. You have the housing market declining. You have the U.S. government, Fed Powell, remaining hawkish, meaning he's not going to pause interest rates anytime soon because inflation is still high. And when you put all these pieces together, what we could have is just a bear market rally that's potentially going to take, that's potentially setting up to take the next leg down. Where? Maybe next stop is the highs of 2020, perhaps. Which is at, say, 240. So unless we take out this pivot here, at a minimum, we're going to test the lows that we saw early this year and the lows we saw in October of last year. Until next time.